Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price movements and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. All right, guys, welcome back to another week. We're just going to jump right into some tokens for you. So first up, I'm going to be talking about Lido. Yesterday, liquid staking project Lido announced that they're going to be introducing something called restaking vaults. So these are basically a competing solution to EigenLayer, which is a restaking project. They've siphoned off a lot of TVL from Lido in the past several months since launch. So to do this, Lido partnered with Symbiotic and Mellow Finance to offer these services, which are basically going to act as the restaking protocol that's Symbiotic and liquid staking protocol, which is Mellow Finance, respectively. So while Lido may not necessarily benefit from this new product integration, Symbiotic will probably benefit as they have access to the $33 billion in TVL from Lido directly. So despite this news, Lido suffered quite a bit in last week's sell-off and is down 22% for the week. All right, next we're going to talk about Optimism. So Optimism, the Layer 2 project, launched something called Fault Proofs yesterday. On Monday. And basically, this is a big milestone in their decentralization roadmap. So in recent years, Optimism has been frequently criticized for not having a decentralized way of proving the accuracy of transactions on chain. So essentially, like, if you move your money from Ethereum to Optimism, you're relying on this centralized entity called the Security Council and you're not able to actually rely on that based on a cryptographic proof. And so they were saying that they needed to create these fault proofs to kind of have that proving piece in between Ethereum mainnet and going to any of the OP stack chains. And they announced yesterday that they have gone and accomplished that, which is great. The fault proof technology is going to allow users to trust that their assets have been sent back to them without using the third-party intermediary. So this is big news. Like I said, big step in their decentralization roadmap. We'll see if the market really reacts to this in the long run. They are down 16%. All right, next up, we're going to talk about Polygon or MATIC. So yesterday, Layer 2 project Polygon announced that they're going to be allocating 100 million tokens annually for the next 10 years towards a community grants program. These tokens are going to be part of the Polygon treasury and are going to come from the annual inflation that has newly been introduced as part of Polygon's change from the MATIC token to the POL token or POL token, which should be happening in the coming months. Already 35 million tokens are available today for builders to apply to. So again, exciting news. Unfortunately, Polygon is down 13% on the week. All right, last up, we're going to talk about Friendtech. This week, SocialFi project Friendtech announced that they're going to migrate off of Base, which is Coinbase's Layer 2, and build their own chain called FriendChain. So if you don't remember Friendtech, I don't think I've talked about them here, but they became really big about August last year. They were like one of the first big apps to launch on Base, which was also kind of a new L2 at the time. And they basically allowed a user to create a profile that mirrored their Twitter profile. And they were able to kind of sell what were called keys. But the idea was kind of access tokens to your particular profile. So users could buy these tokens, you could buy them, you could sell them. And it actually created a really interesting place where okay, if you got access to the front, if you bought my keys, you'd have access to a private chat room. And a lot of influencers and stuff on Twitter were doing a lot of things to basically monetize their following this way. And as more followers bought your token or bought your tokens or your keys, they increased in value. So a very interesting concept. It really took off. It drove a ton of, for several weeks, that was all anybody was doing was messing around with Friendtech. So very, very cool cutting edge application. The Friend token did launch several weeks ago. It has since been a bit of a disappointment. Friend Tech has really not been able to like regain the excitement and usage activity that they saw really early on. And so they have had, kind of struggled to get back to that. They're now hoping that they're going to leave base and launch their own chain. A lot of folks are kind of not sure if this is the best move for them. Time will tell. They're going to be using their own token Friend, which was previously just a governance token, is now the gas token for the new chain once it is launched. Like I said, I think a lot of people have been disappointed with the Friend token to date. It's also only available to trade within the Friend Tech app, which is another bit of a walled garden to keep people out. So a lot of people, though, in immediate markets seem to really like this move. It is up 26% on the week. All right, that's all I got for you guys this week. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving